Hey everyone, and welcome to today's show on Wealth Strategy Secrets. Today we're joined by Pete Snell, Chief Growth Officer at King Operating. Pete is a disciple of Jesus, husband, father, growth fixer, and mountain bike crash magnet. In collaboration with King CEO Jay Young, Pete focuses on prioritizing the lens of the partner and scaling the business. Pete's role centers on the disciplines of partner relations, strategy, marketing, and sales. His past performance highlights include founding and leading a company through almost 2.5 times average annual growth for 3 years. He also served as co-creator and lead fundraiser of the Campbell Award. And he personally closed over $339 million of new business revenue in a 5-year span, leading 2 sales teams. Pete, welcome to the show.
Thanks, Dave. Glad to be here, man.
Yeah, awesome to have you on the show. Really looking forward to this discussion, Pete. And I know our investors are going to get a ton of value out of this and really, learn about a new asset class that I think a lot of people haven't really been exposed to outside of, mainstream media type things. So really excited for this opportunity. Appreciate the time today, Pete. But I guess to kick things off, why don't we just talk about your background a little bit? It sounds pretty diverse. I love that mountain bike crash magnet. So tell us a little bit about yourself and, how you got into this whole space of investing and getting into oil.
Yeah, I appreciate it, Dave. I like the mountain bike. I've done about 10 years of Brazilian Jiu-Jitsu. So I like to test myself physically and mentally and together. So I don't know, that probably plays a little, that's relevant as it relates to how I like to invest. I think so. I'm excited to be here today, and I love my family, and I love Jesus. So those are the things that drive me and make my mind work. And so as it relates to my background, I've always been a relationship guy. I like to look at people and look at opportunities and then also solve problems. And so when I look at like what interests me, it's difficult things and creating good things out of difficult things. And usually you can find other good people in situations like that who can see things that same way. And so spend a lot of time in sales and marketing coming up through most of my career, and a lot in healthcare, and which is interesting. It's an interesting industry from what I'm in now, and spent a lot of time in technology as well. But I'm in oil and gas now, and I absolutely love it. It is awesome to be in oil and gas. It's tangible, right? You can get your hands on it, and to actually be in the production side has been a really exciting treat for me. So I don't know if that's enough of a background, but that sort of brings it all together, at least through my lens today. So.
Yeah, no, that's great, Pete. And, and I think for our listeners in our community, right, we kind of talk about our investment thesis, our strike zone. And, what got me so excited about this opportunity that, we've been talking about for quite some time is really looking at opportunities that are really, what I would consider multidimensional in nature, right? And everyone's kind of attuned to, Wall Street and conventional wisdom around getting a particular ROI on a particular investment. But in this case, we're looking for these multi-dimensions where you can have predictable cash flow, you have tax efficiency, which is huge in and of itself, right?
Yeah.
To an investment, there is downside protection where you have some, non-correlation to markets, for example, especially as it relates to the stock market, and then you have upside potential with these things as well. So while we're primarily focused on real estate, it's really interesting as I learned about oil and gas, how well that fits into our thesis. So why don't we, start things off there and really talk about, your view on, the need for oil and gas and your perspective from that.
Yeah, for sure. And one thing I wanted to add, and you sort of alluded to this, but you think about a couple of those key things, you know, not paying taxes or avoiding paying taxes. I mean, I hate taxes. So that's, I don't know anybody who likes taxes. That's true, but I love passive income. Also, you know, something that's interesting about any investment, and you get to talk about this in real estate, but a multiple, having an exit strategy, getting a multiple on the investment, that is a huge hook for me into anything that I would invest in. But you think about oil and gas, and we can start bigger, you know, talk about it in a bigger sense, you know, what's going on geopolitically. And I get a lot of questions about, well, how much is Russia and the Ukraine conflict, as an example, affecting the price of oil and natural gas? Well, it is. I mean, let's be honest, it is. But it is, you know, I'm not an economist, but you're looking at maybe $5-10 a barrel for something like that. Your bigger issue is the global demand is outpacing supply, not just in our ability as a globe to actually produce oil and gas, but actually in our ability to scale infrastructure to meet the growing demand. So if you think about it, it's just, you know, you think about it as a scale. You got demand growing faster than you can even set up infrastructure to increase supply. Well, that equals higher prices because your commodity becomes more valuable. It also becomes more valuable, not just because of that supply and demand problem, which is really because we have more people on the planet than ever before. And we had historically, we had this turn away from capitalization into the oil and gas industry. Well, the petroleum needs that we all, I mean, my glasses, your glasses, the product in my hair, the shirt I'm wearing, I mean, everything, your microphone, it's all petroleum. There's petroleum in all of that in various forms. And so as you continue to produce more and more products out in the world, you're going to have more and more demand that just simply, if you're not capitalizing the supply infrastructure, that gap is going to grow. That's been brewing for years now. Ukraine, Russia, that certainly amplified it. Now there's been talk for years, but China possibly, you know, with Taiwan, will that have an impact? Absolutely. Even the threat of that is going to hold prices higher. You've got Europe, who's, you know, fatally dependent on Russia for natural gas, as an example. And if they were to simply tell Russia, hey, we don't want your natural gas anymore, they would slip into a depression. And they're already, you know, headed towards bear territory when you look at the markets. So it's a tough dichotomy, but that creates opportunity. Those kinds of things create opportunity. When you look at oil and gas, you've got the supply and demand dynamic going on. Some people are calling this a super cycle. Jay, my partner, my CEO, he talks about it in his blog a couple of blogs ago about this possibly being a super cycle, which is more an amplified version of what you see in oil and gas with high prices. Then you got economic inflation, which is another interesting impact to something like this. And so there, you've got all these factors going along, and then everybody wanted to go green. So a bunch of money for, you know, the better part of a decade went towards capitalizing, going green. Well, it's not that we don't want to have lower emissions and have multiple forms of energy, but for anybody to think that that's going to replace petroleum, they don't have an understanding of what's going on as far as the supply and demand. So you got all these things brewing together, higher prices, longer span for higher prices. That creates opportunity for oil and gas drilling, something that obviously from a production standpoint, we at King Operating, we love that. So yeah, for sure. And I learned something that was quite interesting as well. You know, I think as a society, we're all trying to shift to, you know, moving into a greener environment, right? And we're always thinking green first. So as you think about energy sources there, right, you have solar and wind and, you know, battery power and everything. But it is interesting when you look under the covers, how little actually that, you know, produces, you know, one wind turbine, right? How much energy it takes to actually create that. And then what you get out of that is very small. So, you know, proportionately, I think it is kind of interesting. Do you want to comment on that as well? Yeah,
it's those sources.
Yeah, so look, green is good. I mean, we need greener approaches to energy. We need more energy because the demand simply demands it, right? So I mean, petroleum isn't the only way we're going to get there, but to ignore it or try to suppress it because of, certain sensibilities and there's a lot of arguments on both sides about all that kind of stuff. But you think about electricity, battery power. This is one of the great misnomers in energy, is that battery power somehow is an energy source. It's just a storage unit, like a battery tank for oil. As an example, it is the amount of effort and by the way, petroleum that's required to actually produce and mine the elements that are necessary to make all these batteries that are going into our cars. Your emissions aren't going out the back of your tailpipe, but they are going into the atmosphere no matter what. It's just you don't see it. It's basically sweeping things under the rug. And by the way, electric utility providers, guess what powers them? Natural gas. Where does that come from? Drilling. Coal as well. It comes from mining. Those are the kinds of things. There has been a movement over the last couple of decades for more wind and solar to actually complement and produce that, but they have their own challenges. And so capacity issues, particularly when you look at solar. We got a great video that PragerU, and this is not a political thing, it's just PragerU put together a really practical view about energy. It's about a 5-minute video, and we posted that on our site near the bottom of one of our pages, but you can check out kingoperating.com if you want to see that video. But it tells a really interesting story from somebody who's done the research and can talk about the fact that we need to move that way, and we need to be green, and we need to continue to drill. We need all of it because we have more people on this earth than we've ever had at any point in the history of Earth, demanding more and more need for energy. It's got to come from multiple sources. That's important. That comes back to, hey, from you think about a small independent like King Operating, we obviously love that because it creates opportunity for us and the accredited investor partners that join us in actually participating in the financial returns that can happen from that, because it ain't going anywhere. It's a really good time to be in that space from an investment standpoint. And it's here to stay for the next at least couple of years, maybe longer. With this political environment too, I didn't even mention that. It doesn't matter your politics. People make choices on policy, and the policy that's made by this particular administration will continue to have negative economic impact, because that's what's happening. You don't have to be a rocket scientist to see how this administration's policy is affecting the economics of this country. But that does, again, feed into higher prices and more opportunity for people who are already positioned to take advantage from a production standpoint. You just got to capitalize. That's why have a job. So.
Right. No, that's those are some excellent points. And I think, again, we hear a lot of things, right, in mainstream media, which aren't necessarily true. So I appreciate you shedding some light on that. It is a new asset class for a lot of folks. Tell us as well, really from a business model perspective, right? I know there's different levels that you can get involved in oil and gas, right? There's, exploration that could be on the riskier side. So tell us a little bit more about, your business model and approach.
Yeah. So just to get some scope, you can invest in oil stocks as an example. I mean, that's certainly a strategy, right? If you see how they're performing, there's something there, and you know how to participate in the stock market. There are other funds out there that, more traditional funds that you could participate in that, are invested in energy. There's, you can invest in mining. There's different ways to get involved, many different ways to get involved in energy. The way that it works, like where we value it is getting involved in an independent. So we're King Operating as an independent oil and gas production company. So, and there are other independents out there as well. And there's opportunities to invest in the projects that people have out there. Institutions have been doing big projects for years with big companies. The project that we focus on is really quite unique, particularly for independent producers. What you commonly see in the marketplace is the opportunity to get a tax break. Thanks, President Reagan, for creating that. But you get a significant tax opportunity. I mean, if you invest enough in any independent project, you could potentially pay zero taxes. I mean, that is a real scenario, and that kind of depends on each person's situation. But almost any independent operator can provide some value there. Then you have monthly passive income. Again, you can cash flow off of production out of the ground, particularly when prices are higher. When you have a well or what we call a wellbore assignment, or you're invested particularly in the production of a single or a group of wells. And then there's a different model, which is unlike this in any way with any other independent operator, and that is this idea of scaling for an exit. So when you actually invest in a King fund, a King managed fund, you're actually investing in something similar to a real estate model. So when you think about real estate, you think about value add, right? So when you come into a real estate deal, you're actually investing in a property. If you bring up the value in that commercial property, you're going to bring up the value of not just that property, but maybe properties around it or other properties in the fund. There's value that you accrete, and kind of the tide raises all boats, right? In real estate, you have value add opportunity, you have some tax strategy opportunities, and you can get some monthly passive income. Well, like that, when you invest in a King managed fund, the model that we focus on is really increasing value by drilling new wells. So first you acquire distressed or undervalued properties. Sometimes it has production. Then you develop that. So that's when you drill new wells. So first it's acquire, then you develop, and then the divestiture is what we'll talk about in a second. But the development is really the key part here, because you're taking these assets that you've acquired in the fund, and investors participate in the fund. So they don't just participate in what we call a wellbore assignment, which is just a well and the production associated to that well, which I'm not saying is a bad thing. What I'm saying is there's no scale, there's no exit, there's no big opportunity. And you may lose production. You will lose production over time if you're assigned to a particular well. You're going to basically get value and passive income out of that as long as it's able to produce. Again, not saying it's a bad investment. I'm just saying it doesn't have the explosive scalable value that you get that works more like real estate, where you drill a well, and because you drill a well and you prove that there's oil in that particular pay zone, you have more locations around that particular drilled asset. Now those locations have value. You can go and drill more wells. We call those PUDs. Those locations around a drilled well have value. And they have land value, they have resource value. And so now that they have value because you've proven with a well drill, which by the way, we're in proven areas anyway. It's not like there's not other drilling around. Like the geology that gets done to understand where we should be drilling isn't like wildcatting, which is exploring in unknown areas. These are known basins with known pay zones where there's been a whole bunch of work done before we got there. So it's really a de-risked approach to getting value. But once you drill that well, you get value with the locations around it. You build that up at scale. So multiple wells drilled, multiple PUD locations, you package them all together, and a larger company who has more capital will find that asset attractive. And that's when you divest it for a multiple. It's really that simple. And that's what's unique to the King Fund.
Yeah, no, that's excellent, Pete. And I think that was one of the things that, attracted to me so much to you guys in this opportunity, and thought would be ideal, for our investor community. And, it was interesting as we learned, right, the story about Jay and one of his friends who was a big, real estate investor himself. And, Jay learned about this model. So this is so parallel to, doing a value add property, right?
Yeah, and I'm glad you brought that up, because I totally forgot. I should have led with that. Good job. I'm glad you remember the research. So that's really critical, how this all started, because Jay was doing that, and investors would get value on some wells, and some were better than others. But He had in 2015, he was on a chairlift with a good friend of his out in Beaver Creek, and he's going up there and he's like, how do you do this? Well, the whole idea had come to him from a real estate guy, and they were on the chairlift, and he said, well, this is how I increase value. We do value add. And this guy owned and your investors would probably appreciate this. He owned 33,000 doors. I didn't even know what that meant until I talked to Jay, and he explained it to me because he didn't know what that meant at the time. But the whole idea is this whole idea of increasing value through the land and through this value add approach came from real estate. And it really is a real estate hybrid type of play. And that's why we like real estate. We believe that people who understand real estate will understand this model. And it's unlike any other opportunity that they as an accredited individual investor can have in oil and gas. It just doesn't exist.
Yeah, exactly. The fundamentals are very similar, right? And, let's talk about that for a second, right? We talk about having downside protection as one of our dimensions, so right. When I look at that, you're not just doing exploratory work, hoping, right? Which would be much more on the speculative side of investing. We would see that more at the top of the pyramid, but you're going to have these multi-dimensions here where you're automatically getting passive income, right? Day one from oil that's actually producing, right? So now you're bringing out passive income that starts to de-risk you, right away. You also get that tax benefit, which is just massive. And I think we should really, pause here for a little bit so investors can really, grasp how big this is. And, we're always looking for phenomenal opportunities for investors. And this really is one because what it can do, right, is that, in real estate, you can take your passive losses to offset your passive gains. Yeah. However, with oil and gas, you can actually take these losses and completely offset active income.
Yeah. Yeah.
So that means,
yeah.
You can take, go ahead, Pete.
No, I'm sorry. You did better at explaining the contrast to the real estate opportunity with taxes, but this is you take it against your AGI, your adjusted gross income. Sorry, I went acronym on you there, but you take it against your adjusted gross income. So for example, and if you have a good operator, for example, people in the fund that were in the current fund that's operating at King, last year, they got an 81% deduction of the total capital they invested. So for example, let's say someone invested $200,000, they would get approximately 160,000-ish, 164,000 against. So if you have a $400,000 income, you can take 160 against that. Now, it's not like you don't have other tax strategies, but that's where the zero comes in. Because if you have 400K and you have other tax strategies that already reduce your adjusted gross income down to a certain level, if you invested enough, you could essentially wipe out your taxable income, depending on how much you wanted to invest. Where else?
Yeah, that is massive, right? And I've invested in things like land easements, where you're actually, you're getting a multiple off of what you put in, but it's not even an investment, right? It's all about just kind of reducing, your active income. But in this case, you still have the investment. But if you're able to knock down your taxes, just think about it, even a couple of tax brackets, or down to zero, what does that do to your IRR on this investment? You get a massive bump on it.
You do. And the funny thing is you think about it, I could pay Uncle Sam or I could invest back. You're going to write a check one way or the other. So you write a check to put money to work back for you, or you can write a check to Uncle Sam. I don't think he's my uncle or anybody. I don't like them. I don't like that. I hate them.
Well, look, we've learned a lot. We talk a lot about taxes, and really, I think once you start to look at them in a different way, the tax code is actually a roadmap of incentives right, for business owners and investors, right?
Yep.
But you just need to know where to look. And this is one of those places, where you should be looking. And so the government is really incentivizing you to invest in oil and gas because we need these energy sources, right? Just like we need real estate.
You're right. And that is the absolute correct way to look at it, despite my emotional reaction to everything on
Yes.
related to tax. But you're right. It is actually a roadmap to value creation for you as an individual, but it supports the country, which I love. I mean, I love, there's nothing more patriotic than investing in oil and gas, and having an opportunity to do that is something that you can benefit from as an individual investor. And so it's real important to see that. And look, you got to make sure. And the other part that we didn't talk about is there's another piece to that, which is you're not paying taxes on your monthly passive income that's returned back to you while you're still getting return of original capital. So for example, an investor comes into a deal and they start receiving that monthly passive income the next month, then they're not paying taxes on that income as it accretes up until they get to their originally invested capital, and then it becomes something that can be taxable. But and again, I just wanted to point this out. Not a tax expert. I just know what I need to know for the oil and gas production business. Always consult this is the disclaimer. Always consult your tax professional for advice based on your circumstance. But yeah, it's a great opportunity.
No, absolutely. And again, so let's again go back, because there's it's still so much to unpack about this, right? So you go in and you've got all of these well locations that are producing passive income, right out of the gate. You're going to get this, tax efficiency, huge deduction in your taxes in that year that you actually invest. The passive income has, tax efficiency to it. And then talk to us a little bit more about the upside potential in addition to that, and as well the hold period.
Yeah, that's my favorite part. So, and it's really that is the single most unique component to being able, as an accredited investor, as an individual accredited investor, to be able to participate in this kind of thing. It's the only, I was even doing it, Dave, I was doing a search. I just wanted to see if anybody had been playing catch up to King on this, because it's one of the reasons that brought me on board. That's one of the things I was attracted about Jay, is just this vision for this kind of thing. It's not like the large players haven't been doing this for their stockholders or their institutional level investors, which is a much larger play. But that's in that upper echelon space. The individual accredited investor has a great difficulty in participating. You just haven't been able to. But that whole idea of taking this, making sure that it's de-risked, but you also have the operational fortitude and excellence to operate different geographic locations, which is part of the de-risk strategy, to make sure that you have product mix of both oil and gas at a balanced level, so that you can get, it's a de-risk play, because even though they're related in pricing, they're not the same. I would say they're more loosely connected as far as how they react to the market conditions globally. But you've got these things, you got to have a balance there in both of those. And there's different strategies for different companies out there that play into this, but all that comes into play where you acquire these multiple assets in different geographic locations, and you prove them up, you develop them to again, through the PUD model with the locations, to get a larger value, a multiple that's created. And then there are companies that are larger, that have more capital, that want to acquire those properties. And so they come in to do that. And that's when you can actually divest the properties for a multiple, sometimes as much as 3 and 4, even 5x after everything's done, after you get through all paying your debt off and all those components that are part of it. And by the way, debt is a great thing for this kind of project, because it creates leverage. It's a lot cheaper to pay than saying more mouths to feed with more accredited investors. Debt gives you leverage. It helps you scale more quickly so that you can get to that exit. So these are the kinds of things that play into this particular strategy, and why this is so exciting. I mean, me personally, Dave, you and I were talking about this in our prep calls, but Monthly passive income is great. I like to work, so I don't kind of think about things that way. I'm not saying it's bad. It's great. We all like it, but and I like not paying taxes, or more importantly, as you corrected me earlier, to use the tax strategies that will help all of us, which is absolutely the right way to look at it, so that we can gain value, and the country can gain value, and all people we can raise all tides. But I love the opportunity to get a 3 or 4x multiple. That's why I'm a guy who's invested in my friends' tech startups that, are basically vaporware when they come, and they're like, I need you to write me a check and help me get a client. So I'll do that. And I've had some victories out of that because I love the idea of a multiple. I love the idea of 3, 4, maybe max 5 years, there's an exit. And then I can move on to the next project. And I've done that before in tech companies, and now I'm doing it in oil and gas. And I know that works if you get with the right people who understand the right strategy and have a unique edge in the marketplace that their competitors don't. That's why I came to work with Jay. That's why I love King, because it's already delivering to the investors.
Yeah, no, it's a great point, Pete. And, we talk about that as well. Mindset is everything. And when you can start thinking in multiples, you can think, how can I double my money? How can I triple my money? How can I shorten that amount of time? How can I reduce my taxes by 2x? All of those kind of things, right? Thinking in multiples is really going to become exponential versus a linear type growth model, which is just, it's very incremental, right? And it just takes, really takes too much time. So Pete, I'd like to also talk to you really about risks as well, right? So this sounds, very exciting, but as part of my role, I spend a lot of time doing due diligence and really trying to look under the hood and understand, the operating team behind, these things. Are they going to be able to deliver right to the business model? What are the incumbent risks out there? So can you share with us a little bit about the team and the biggest risks that you see?
Yeah. And I always think of it, and this is just a philosophical thing, take it or leave it. But I'm a danger guy. So risk is kind of nebulous. People get to define that. Danger is a much more tangible, easy to quantify kind of thing. And so that's kind of what are your dangers in doing this? And so dangers come from things like poor operations, meaning you don't have the right people in place who haven't not just done it before, but how do they look forward? Do they understand how to use a leading edge, not bleeding edge, but leading edge technology in order to advance the ball? Are they using the right operational approaches in order to execute this? But does the operational approach meet to the strategy? And so the danger is when you have disconnect in those kinds of things. There's also danger in prices retreating. So when you think about this particular kind of thing in oil and gas, one of the challenges you can face is that something that we don't control is the pricing. And so that's why operational excellence is even more important, and why people like, first of all, Jay, but you look at Rex, who he hates when I say this, but he's a former RS guy and in like another life. I mean, Rex is our CFO, and he is an economic genius when it comes to oil and gas. I mean, just understanding how to actually create value out of the resources that come out of the ground, because there's a lot of moving parts when it comes to actually turning oil and gas into money and getting return out of that. Because if you can imagine, like any business, there's all these different things that have to go right. And so he's a genius when it comes to that. He understands the tax implications and the relationships between that. Having guys like Chandler Knox, who is a SMU graduate from their petroleum school. He's absolutely brilliant. He's been in the field for a good 15 years now. He's worked, as a roughneck all the way to actually running rigs and now runs multiple operations for us. He's amazing. And then Paul Jerome, who's our geoscientist, and making sure that you have the right kind of people like Paul, who can give you objective analysis about opportunities. There's not Pollyanna, and they're not, paid critics, right? what does the data tell me? What does the data not tell me? How can I provide that information to people so they can make the most informed decision? Because at the end of the day, one of the risks is you're still drilling really, really far down into the earth, which is really dark. Your hole is about this big-ish, depending on your actual well bore. And you're doing a lot of things to get to a particular pay zone. Great technology these days in order to do it. But making sure that you're doing that with the right people who've done it before, having really good frac partners, having a good rig partner. I kind of did that in reverse, but making sure that you're using the latest practices in fracking, you know, the fracking, and most of these frac operators do it now, but making sure you have, you know, you're using frac practices from, you know, post 2018, which is a whole different, you know, horizontal frac in 2016 was a lot different than 2019 as an example. And so making sure you have the right partners, because when you look at oil and gas, that's all part of the picture, but our team matters. It matters for any independent operator. You got to understand that you got to have good people that know how to work together within the context of that strategy in order to really deliver at the end a return to your investor, because all that's important, but that's just sausage making. The real important thing is can you make sausage that tastes good? And this oil and gas, it tastes really good right now. I mean, there's more I could go deeper, but the bottom line is the people are really critical. So
yeah, no, that's great. So what would you say is the actual biggest risk? Is it price sensitivity in the market?
Yeah, pricing. It's the greatest risk to two things. It will deplete your monthly passive income because your margins get squeezed, simply because you have higher margins when you have higher prices. And while inflation does certainly, some people may be, well, what about your supply chain? Yeah, we have an impact from that, but it's not at the rate. While we have higher costs on that basis, the rate of price increase far outpaces any kind of negative impact that we see in supply chain. So prices coming down, if they're ahead of supply chain prices, that can squeeze your margins. So we like higher prices. You know, things above 75 are good. You start getting into the 50 range, and we're getting uncomfortable. The other part of that is when you have a pricing squeeze like that, if there's not an infrastructure ramp like there is right now globally to get more supply produced, you know, that's why an asset like the assets that King is developing right now, that's why they're attractive to larger players, because they can get to market quicker with proven areas where they can just put their capital to work. They don't have to go and figure stuff out. It's take the roadmap that we created, take the land that we acquired, that they've acquired from us, and just go drill and put a bunch of rigs up at the same time and make a lot of money. Wall Street loves that. So those are things that we value. If price goes down, that stuff becomes less attractive. And so then what you're looking at is that you're still de-risked, let's be honest, or de-dangered, I like to say, but you're de-risked because while you're still going to have monthly passive income, you'll just have smaller amounts of it over a longer period of time. And if the cycle comes back up, you could potentially look for a divestiture further down the road. So there's still a value play, a backup plan, if you will, there, but that's definitely, pricing is the greatest risk.
Yeah, and just to level set as well, I mean, we're trading what's around 108 or something. Where are we today in the market?
I didn't look this morning, but we've been running 110 pretty consistent. And
okay,
gas, that's natural gas, man, $8, come on, per MCF. I mean, that is insanely good.
Yeah, that's really good. So it's interesting because here's another parallel to real estate, right? So in real estate, we do what's called a sensitivity analysis, where, you know, you have a 300 unit building and we can know that, hey, we can run an asset down to, let's say, 63% occupancy before, you start going negative, right, in the asset. So when you talk about going from a price of 110 to around 50, if you're saying in the 50s, it starts getting uncomfortable, you know, that in my mind, that's kind of, you know, where your break even is. So it would take a lot to get there, right? I mean, you know, what I know you can't forecast this, but, you know, from your perspective, you know, what would you say about oil getting to $50 a barrel again?
Yeah, I mean, it's not happening during the next couple of years. I mean, it's just there's no market condition. Even if the Russia-Ukraine thing gets solved, there's no market condition where it goes back to what I said at the very beginning of this podcast we're still in ramp phase on infrastructure just to make production. Now we happen to be out in front of that because that's all we do is production, but bottom line is we're a long way from 50, and you got other factors too that, lease operating expenses, royalties, there's all these other things that are part of that. But there's a sensitivity quotient to that or view on those things as well. And bottom line is prices. I mean, there's not a scenario, particularly with this administration and the policy that's in place, that is going to make a change to that. The midterm election, you might get a temporary relief because it's like a quick shot of adrenaline or something that might give you some price relief for a couple of days or something. But you're not going to see, even with the red wave that they're talking about politically that could come in November, that's not going to change the supply and demand problem. It just won't.
Yeah. No, excellent, Pete. This has been, I think a phenomenal just overview. I'm sure people are, drinking from the fire hose right now. Is kind of a lot, anytime you have a new asset class, things to assimilate. But let's just transition for a second. Wanted to also, sounds like between mountain bike crashing and jujitsu practice, you have a lot going on personally as well. So if you could give just one piece of advice to our listeners about from a personal development perspective, what would it be? Well,
look, it's the most important thing I could say, and this is my personal experience, but I would say investigate the validity of Scripture and who Jesus Christ is. If you want to look at it, I know that could be polarizing. It's okay. You don't have to like it. You can say that I'm not interested in that. That's okay. I hope that's not the case, but I would say that the most important thing that's ever happened in my life, ahead of my kids being born, whom I love greatly, and my wife, is that I became a born again believer in Christ Jesus. And that was a choice I went through where I basically learned some information about who Jesus is and the fact that he claimed to rise from the grave. And in so doing, 500 people witnessed that. And so if that seems unbelievable to someone, I say, go do the research. It's probably been the most important personal development I've done, is doing the research and then testing my faith over time to really understand, do I have, merit in other ways to believe what I believe, because it has eternal implications about life beyond just this body and this earth. And again, I would invite anybody, regardless of your religious background or whatever challenges you had as a kid, it will test you mentally to consider that truth and really find out if there's something behind that. That is the most important thing that's ever happened to me, and Jesus makes me better. So hopefully that could be something that others in your audience would value as well. So thanks for giving me an opportunity.
Yeah, absolutely. Appreciate you sharing and being transparent about that. It's kind of interesting, right? As we talk about, building wealth a lot, we really try to unpack the psychology of building wealth. And in my experience, it's been kind of interesting also going through the military and, being trained as a Marine officer, and the values and principles that we uphold are just, so strong, so ingrained in you. And it is similar to a faith, whatever your faith is.
Right.
And so now as we look forward, into investing into, opportunities like this and everything, I think it's also really important for investors to understand, the teams who are behind these things, and to know that they have, these types of values, right? So they're being good stewards of your capital. It's just not some kind of, transactional type deal. Everyone is incentivized and as well has the morals to be able to looking out for your capital as best as possible.
No, I think that's a great call out, and absolutely. I mean, Scripture is very clear about stewardship and the importance of that. I mean, our investors get a weekly update, and one of the things that we do is as much to hold ourselves accountable as it is to share with them. We typically pick an inspiration at the bottom of their weekly update, and people can take it or leave it, but we want them to know that we have a standard by which we operate, and we're not perfect, but we aspire to what Scripture describes as good stewardship, which actually the word steward is manager. It's manager. You're actually managing someone else's property. That's, if you look at how Scripture talks about it, it's very clear about the importance of being a good steward, right? You've heard that in pop culture and common culture as well. Stewardship is really important. I think you hit it right on the head. That's really important to note and make the connection. While we can't control everything, it is our aspiration to make sure that we take good, honorable care of the funds that are stewarded to us, because they're not ours. They're still yours, and they're still mine as I look at, what I invest. And Jay, he's the single largest investor. He has a dog in the hunt that he's in as well. And so we need to be good stewards, and we need to be actual partners. And I appreciate you bringing that forward, because that's really important. We need to be accountable to that. So
yeah. Awesome, Pete. Really appreciate it. Folks, really hope you enjoyed the show with Pete. We are pleased to present you with a limited opportunity to invest in one of the latest oil and gas investments. This investment is open to accredited investors only. If you'd like to learn more, please go to our website, pantheoninvest.com, and apply to become part of our exclusive investor community, where you'll receive access for this opportunity.
Awesome.
Pete, thanks so much for coming on the show. Really enjoyed it.
Hey, Dave, thanks for having me, man. It's good seeing your face again. Looking forward to our next conversation, my man.
Awesome. Thank you.
All right. Hey, Dave, thanks for having me, man. It's good seeing your face again. Looking forward to our next conversation, my man.
Awesome. Thank you.
All right.